This is an adjustment to one of the trades we're in, Crwd. We're in a put butterfly, broken wing with no risk to the downside. We put this trade on last week. The stock is currently trading at around 230. It has moved in the direction of our butterfly. We put this butterfly on with the price being outside of the profit tent. Now with price moving inside a tent, this trade is showing an unrealized profit of about 30% or so. One of several ways we can manage this trade. One is we can do nothing, and as long as stock is trading below 236.80 or so, that's our break even to the downside. This trade is going to be in good shape with no downside risk, and we have 18 days until expiration. One other way to manage this trade is to take a 25-30% gain and move on. And the adjustment that I want to talk about here is converting this trade from a broken wing put butterfly into a put calendar. And this is what this trade looks like. We're long 240, we're short 2 of the 225s, and we're long the 215 put. By closing out the long puts, so selling to close the 240 and selling to close the 215, this will leave us with short 2 of the 225s. We would then buy to open the 225 put with more time until expiration. So we would be short 2 puts in the September 3rd expiration, and we'd be long 2 puts in September 10th expiration. This would make it a put calendar centered at 225. And the best case scenario for this trade is that stock is trading somewhere inside of this profit tent, which is pretty wide right now. We have break-evens to the downside at around 196.5, all the way up to about 260.5. And these break-evens aren't fixed, meaning they'll fluctuate with implied volatility both on the front month and on the back month. But for as long as the price stays inside the tent, we have positive theta. We have almost neutral delta, meaning a move up or down doesn't really hurt the position as much. And if we hold this position for maybe a couple of weeks, we have premium on the front month, which is decaying faster than the premium on the back month. And that is where we get the positive theta component. This will work in our favor. Now, the downside to this adjustment is that if we're going to see a big move in either direction, meaning if we move sharply higher or if the stock completely tanks and we go under 190, obviously there's some risk both to the downside and to the upside. But for right now, making this adjustment will remove almost all of the risk. This adjustment right now is going for about probably get 270 credit. So original risk in this trade was about $332. If we can take out $270 worth of risk out of this trade, it'll leave us with just about $80 or $70 of risk remaining in this trade over the next 18 days. So again, for those that are a little bit more advanced, we can look to close out the long puts in September 3rd expiration, and we can replace these 2 puts that we're closing. We would open 2 puts with a little bit of more time until expiration, converting this broken wing put butterfly into a put calendar centered at 225, give the stock another week or 10 days. And I think that we might be able to get a little bit more profit out of this trade.